Well, hello once again, Maverick traders. Welcome out to your Maverick Currencies midweek for November 2nd. Today is the Fed meeting, and we are going to trade it together. As always, a quick reminder to make sure that you follow your trading plan. So let's go through this past, the first part of this week, kind of talk about what's happening, what's leading up to the Fed meeting, so we have a little bit better understanding of how we think the second half of the week goes, because that's what we're going to be trading here together. So first, the stock market, when you look at risk taking, we're still in this big bear market, but we're in a corrective pattern to the upside. And so you kind of have these cross currents where, you're kind of swimming against the tide a little bit. Interestingly enough, I think there's more to go. I think the stocks have a little more to go. And part of that is I think the US dollar has more downside to go. That should lead to some risk taking. Remember, the dollar strength is a headwind for a lot of things. It has hurt the bond market. It has hurt international stocks. We know it's hurt US based stocks, the S&P 500. And obviously, it's been a factor in terms of influencing other currencies relatively weak as compared to the US dollar. Euro USD trading well below par and breaking that $1 barrier. So there's been a lot of these headwinds. I think there's more downside to go, and so obviously we're going to be trading the US dollar. That's going to be our principal focus today on the Fed meeting, because that's the currency that'll be moving most. Now we've got to figure out what to match it up against. Economic data this week, ADP employment came in at 239 versus 178 expected. The New Zealand dollar, kind of, as you look at employment change, this is a positive, but it's interesting. It's interesting how good news now becomes bad news. Like ADP employment, we should be cheering on the fact that there's more people getting jobs, but yet there is an argument to be made that that might not be good for risk taking. As these numbers come in better than expected, well, what does that mean? That means that inflation might stay a little longer, that the economy's strong, and these are factors that the central banks are trying to battle. So it's sort of a situation of some good news kind of becomes bad price action sometimes. But I'm going to continue to cheer on employment numbers to be positive. I could see asset prices coming down. I can see inflation calming and cooling off. But let's keep strong employment. That's always something to cheer for. So far this week, kind of a rough week in terms of asset prices. So the S&P and international markets are down. Crypto basically flat. Oil slightly higher, up 2% on the week. Let's dig into each one of these individually and look at a couple of charts. So here's a chart of the S&P, and we've pulled back now to the 50-period moving average, that red line. And it speaks to the market strength. If I was to predict that Amazon, Google, Facebook, now known as Meta, Microsoft, that all of these companies would be down sharply on their earnings and post-earnings, I probably wouldn't have predicted that the market would be above its 50-period moving average. Those are some of the biggest and most impactful stocks that make up the market. So the fact that the markets have held in relatively well tells us what? Well, although the big boys have been hit, the other stocks are picking up the slack. And so the majority, which have a lower weighting in the index, are going up. More stocks advancing lately than declining. That speaks for a little bit more strength. And oftentimes when you're surprised that something is as strong as it is, it usually goes a bit further. Markets tend to shock and surprise you a little bit on how long some of these strength and weakness patterns last. I'd expect another push to the S&P, and if you look at a long-term chart of the S&P, I don't know if it'll be this strong for sure. If you kind of look at this channel that we've been in, you could almost draw channel lines this way. This is the long-term chart of the S&P, and what I'm pointing out is there's a perfect downtrend line up here at those peaks, and certainly could be that we push up there towards the upper end of the range. Now that would mean kind of a nice rally into year end, that maybe November and December are positive, and then we'll see where we go from there. We could easily fail at that level. We could pull back and establish a higher low and climb higher. We could do a lot of different things, but I actually have changed my opinion on the markets a bit. Not so much around the Fed meeting today. That's a bit of a crapshoot. I don't know if the market goes up, down, or sideways, but overall, I do think we have a little bit more room to go on the upside in stocks. And a little bit more, it should be that the US dollar has a little bit more sideways to lower price action into the end of the year. I think we kind of hit our exhaustion highs, what they often call a capitulation. We had a capitulatory move in that the US dollar was just ramping upward earlier this year. And think about what that meant for other currencies. People that were long the euro against the US dollar, they threw in the towel. They said, too much pain, enough's enough, can't take it. And it was kind of the big punctuation mark at the end of the sentence. So we've already seen this correct. I think there's more to go. For this week, as I said, the New Zealand dollar strong. Some of that data was actually fairly positive there on their employment numbers. And then the euro and the British pound sterling are the weak performers. Everything else basically flat. So let's take a look here at crypto and essentially everything flat. I don't know what Litecoin is doing. This is news related. It's kind of the outlier, up 8.9, where everything else is down or flat on the week. Crypto is right at that scale where it could break out to the upside. I've been of the mindset that it's probably going to fail at its current levels, but we'll take a little closer look at it right here. So as we look at the markets, give credit where credit is due, above the 20, on top of the 50. Maybe we're just choppy and sideways here for a while, but there is room to stretch a little further to that downtrend line. And by the way, we'd still be in a bear market even if we kind of stretch a little further, big picture. In the short term, these short-term trends have turned a little bit more positive in the markets. As we take a closer look at these charts, let's take a look at a few of them. Here's international stocks, and similar to the S&P, we kind of pierced above the 50. A little choppiness, and maybe we pull back for a day or two, but I think we'll make one more leg, one more push to the upside into year end. That's my anticipation at this point going forward. So kind of a risk on move. Bitcoin and crypto in general, you have this kind of downtrending area here, this downtrend line, and we talked about this last week, and I was of the opinion that, hey, this is probably where we fail. It's kind of up at the upper channel. We haven't done that yet. We haven't really truly broken out either, but it's at that make or break kind of point. And again, I'm not trading it yet. If you were trading it, it'd be pretty hard to kind of jump the gun a little bit. You might have to kind of wait and see, but I would say today's candle is a very good one if it fails. So if we leave this long upper shadow and we start to pivot downward, then I could see getting short and more aggressive. To this point, it's sideways. It's stuck right here at the top end of the range. So be a little bit careful, be a little bit cautious. Just speaking to my outlook on stocks and on the US dollar kind of leads me to think that maybe it'll go up a bit further before it's all said and done. So, I have to change my tune a little bit just because I've really changed my tune on equities, thinking that there's another push coming to the upside. I was not of that mindset last week. I really haven't changed my opinion on crypto. I could see a dynamic where maybe crypto struggles and does trade back down, even though stocks and some other assets trade up. That will happen from time to time. We're coming into the Fed meeting. Expectations are for a 75 basis point hike, that we move the Fed funds to 4%. Now, There have been rumblings that markets are hopeful that they'll only go by 50, that there could be a positive surprise. I don't think that's likely. So there may be a little disappointment in the fact that they go by 75, but it's probably going to be the message more than anything else. And lately, what we've been seeing is a trend. When the number comes out, the market goes down. And then as the press conference begins, the market goes up. It's kind of risk off and then risk on. And it's done that a number of times in a row here. Now, these little trends are always meant to be broken, so maybe this time it'll do the exact opposite or something. I don't know, but you do have two periods there. You have the release of the data at 2 p.m. Eastern Time coming up here shortly, and then a half an hour later, the press conference starts. And you have to be aware of that 30 minutes later at 2:30 p.m. Eastern Time. Even though this class will be over with at that point, be aware of that time period because volatility ramps back up at that period of time. We're packed with things going on. Bank of England comes out tomorrow morning. Expectations are again for a 75 basis point rate hike. You've got Canadian and U.S. employment on Friday. Expectations for non-farm payrolls is down. Um, I never root against jobs. I always think, that's vitally important. Just when people have jobs, they have some money to spend, you have a better economic condition. If we lose the job market, the economy is going to suffer and it's hard to recover. These things oftentimes act like dominoes. When one topples over, it's not just toppling over by itself. It really factors into it triggers other dominoes to fall over. So I'm certainly not rooting for the Fed to really hammer the jobs market. I don't think that's in anyone's best interest. I think they've screwed this whole thing up, and that's my opinion on it. So my focus, probably no surprise, is going to be on US dollar charts. And so a lot of times what I like to do is kind of get a big picture viewpoint. Okay, where do I want to hunt? Here's Aussie USD, and if it had kind of a perfect setup, I would pay attention to that. It's kind of, maybe towards the top end of the range, but let's keep looking. Here's Kiwi USD, which actually is at the top end of its range already, but may be breaking through. And remember, I want to be short the US dollar. So I kind of like that price action. Maybe we can keep playing it, but I don't love playing upside breakouts from big downward trends. You've got all this overhead supply. That's not my favorite. I'd rather buy the dip when trading with that type of factor. US dollar versus CAD. US dollar looks like more of a buy versus the CAD, so that's not going to be where I'm hunting. US dollar versus Swiss franc, kind of in a choppy period. Pound versus US dollar. Now we've got a new uptrend where we've gone above some moving averages and we're in a pullback. Okay, so this one moves interestingly, and Euro USD. Look at this 50 period moving average. We had been below it, below it, below it, and failing at it. Basically, we broke through, and look at where we're at, right on top of it. So Euro USD, I specifically chose this one as being the last chart because it's going to be my main focus here. Pound would be second focus for me. Let's come into a little bit shorter term charts and kind of look at this dynamic. So 4-hour charts, we've been in a corrective phase. 1-hour charts, you're going to see the same thing, kind of choppy price action. Let's zoom it out a little bit. If the 4-hour, if the 8-hour, if these longer term time periods are down, and you're going to have the shorter term time periods down as well, right? But if I look at this hourly chart, we're actually starting to rebound a bit. We've formed a little pivot. So let's come into an ultra short time period like a 15-minute chart. Now, we wouldn't really trade a 15-minute chart unless we were really short term with it. kind of expecting to be in maybe just for a couple of hours or something. You kind of have this triangular pattern, right? You've established a level of support. You have the upper end of the range here. And so there's two possible kind of outcomes. One is that it fails here and goes and plummets below support. Well, that would not get us long USD. If we were shorting this, or that would not get us short USD, I should say. If we were shorting this, then we would be buying US dollars, and I prefer to be on the other side of that trade for the coming days. So looking at it as maybe on this little 15-minute chart, we can break out to the upside. Maybe, and it's not much. I mean, we're talking about a few pips, right? Because from 98.86 to go above 99, well, that's only 14 pips. So you're kind of in that channel, that really short-term channel, that may get a little bit of an upside breakout. Another approach, if we come into the hourly chart and we say, okay, we can see the same chart pattern essentially that we just drew. Here's exactly what we drew. It just now it's condensing those candles into an hourly time frame. Again, you could break out to the upside. You could come back and break to the downside. Either one is a possibility. If we look at this chart and kind of think about the dynamics here, if we can break out to the upside, we're going to change the short-term trend. We're going to be making higher highs up here. We're going to have established some level of support down here, kind of a little double bottom type of dynamic, if and only if we can get above that high. So we've got a little bit of, probably want to see this break out, and then if it kind of fades back in, that's what I'm looking to trade in Euro USD. I'm not going to trade. There's a first move, a second move, sometimes a third move on these announcements, right? I'm going to avoid the first move. If it breaks hard this way, great. We're going to probably be able to take a trade. If it breaks hard this way, well, if you don't mind kind of the long US dollar and you think that's fine, you could short this pair for that matter, right? I don't know if I'm going to do that today. I really think that I want to be short US dollars here, not just on this announcement, but I think I still want to be positioned for that in the coming weeks, in the coming days, and so forth. I think that's where the puck is going, so to speak. The old Wayne Gretzky, don't skate to where the puck is, but skate to where it's going type of idea, and that's what I'm trying to do here. So, for me, if we break hard, that's where we're going to be ready. So one thing you can do, and we talk about this, is maybe have a resting buy order out there, and you'd basically put in your quantity, however much you want to trade. Let's say we wanted to trade 2 lots or 3 lots or whatever it is, and I would get a limit order ready. Now, the reason I'll do a limit order is that specifies how much I'm willing to pay. This is the absolute max that I would be willing to pay, and I have it above the current price. But really what's going to happen is you're going to see this candle spike above. And then if I trigger this order, now it goes active. So if we get a little choppiness where it just spikes down for literally a moment or two, my trade executes. My trade gets us in. So I'm ready to pull the trigger, and it will buy at my price or anything lower. I'm going to be behind though. I'm going to see the price go up, trigger my order, and then just any little dip, even if it's just for 30 seconds, the price dips back down, that's enough to trigger us. Is it possible that the price surges here and just keeps going and we miss it? Yeah, that's always a possibility. So I'm going to sacrifice seeing the breakout, making sure I've got that confirmation that things are spiking, that there's energy in the market, etc. And if I get that, then I can transmit that order. And we'll just round it up. We'll go 99.02. It's kind of where I'll have that ready. You could also attach to it a couple of different things. Let's show how you could attach bracket orders. So if I right click on my buy and go to attach, I can attach brackets. And now you can see that I could put in targets up above. Let's just put in a hypothetical, and stop losses down below. And again, let's put in a hypothetical here. Let's go to 198. Let's just see what this looks like. We'll just put in a few hypotheticals here. What do I have off? 199.02, that's off. That needs to go. Oh, I changed my, that's what's happening. I changed my entry price, sorry. Let's fix that. Something didn't look right. There you go. So now we've got our buy order here at 99.02 is what we had talked about. We can put this limit target. So I just have that buy order sitting there. And let's zoom in so you can see it a little closer. Here's the buy. Here's the stop. I can grab that stop loss and move it wherever I want, right? Let's just leave it right there. I can grab my target and move it wherever I want. Let's say that we were targeting just to the upper end of that range. So here you'd have, you can kind of, it's hard to see that yellow line, unfortunately, but that yellow line is our buy. And then you can see you've got a target up above and a stop loss down below at certain prices. And we're risking about, let's put this to an even number so it's easy math. We're risking 44 pips. The difference between 99.02 and 98.58. So that's, what did I say, 44 pips. The upside is about 50 pips, right? Because our target is exactly 50, it's 50 pips above our entry. So we have 50 pips of upside, and we got 40 whatever pips of downside. And again, that's just a hypothetical. Frankly, I would probably pull my stop loss up in tighter as soon as we get kind of triggered into this. I don't think we'll stay at that risk. I think we'll probably make this more of like 50 pips of profit for 20 pips of risk. We won't need to risk a lot. If this surges up here and then we trigger our buy, we could really put our stop loss probably below the midpoint on this candlestick and risk 20, let's call it 20 to 30 pips is probably where I'll be at when this is all said and done. So having some orders ready. Now your target sell and your stop loss sell, you don't need to transmit. If you transmit this first order, those orders will go in immediately with it. This isn't actually the platform that I trade FX from. This is actually one that I just do educational classes and things from. But anyway, so I won't be actually hitting the transmit buttons on these here live in class, but you'll see it. And I do some stuff on another screen. Sometimes during class I'll literally be teaching and we'll be transmitting orders on another screen. So we'll see how this goes here shortly. Yeah, you could use a variety of different metrics for kind of figuring out where to buy. In this case, I just want to see it break above this pivot high with some energy. I'm just looking for something specific, and once that happens, then I just want to be in as good a price as possible. So it's possible we could move this entry price up a couple of pips, chase it just a little bit. I won't chase it way up here, but chase it a little bit higher than even 99.02. And there's a good chance we could even get in less than that. If it surges up with some energy and then kind of falls back in, maybe it'll trigger us in at 98, 97 or something. But anything surging up here with some energy, then I want to look to buy it as it just kind of chops around. If you've ever traded these events, what do you normally see? You normally see some wild things. You'll see the big spike up, but then it'll come like collapsing back down, then go back up, and it'll just be all over the place as you're sitting there watching it, right? And you'll see that certainly here in about 2 minutes. When that news first hits, and it comes out, we're about a minute and a half away. When it hits, you should see this candle surge either up or down. We'll take the trade more if it spikes up and then kind of chops around after that. That's what we're looking for. Let that first move happen, not trying to predict that it's going up, but if that does happen, then we'll be ready to take that next opportunity. Sometimes, absolutely, these are fake out moves that 100% does happen, could happen in this situation, where it just fakes out to the upside and then collapses from there. That's why our stop loss is there. And I won't be risking, again, too much on this. We'll tighten up our stop pretty quick, you'll see, once we get triggered in. It probably, if you do the math on it, if it spikes up in here, we're probably going to pull our stop loss, right up in here pretty quickly. So our stop might be at 98.80 where it's trading right now, as we're getting triggered in around 99. So that would be about 20 pips of risk. And sometimes these are quick stop outs. Remember, we're trading an event here that's not something we're going to be in for multiple days or weeks or months. We're talking about trading on the Fed meeting and trading this volatility here immediately. So the fireworks are about to begin. Let's take a look at what happens here. I want energy, so I want to see a surge as this occurs. And if it's to the upside, like is happening, here we go. So that's exactly what we talked about. We would trigger the order, and it's already game time. So I'm going to move that stop up here. Stop is at 98.66, and you can see, I mean, we're still in that ballpark. It kind of faded off real quickly, you can see, and now it's coming back up. So you should have had ample opportunity. You got the spike, you got the pullback we talked about. Let's keep moving that stop up, and I think we can come in right underneath 98.75 right now and kind of be in that zone. But this thing is just exactly like we talked about. As you get up here to the target, what I think we could do is take half. So if you want to take half, just basically, instead of selling all 200K, I could sell 100K at 99.52 and then try to raise my stop on the rest. But this is perfect. This is absolutely perfect. And this is why you'd have those orders ready. All you had to do is hit your transmit button. So yeah, we're in, we're live, we're good to go. Another thing you could consider is even moving the stop loss up right now to break even. If you wanted to do that, if you wanted to move that up, you can have a zero risk trade. But I suspect we're going to hit that target very shortly. And again, whether you take profits on all of the trade or half of the trade, I think right here, right now, and I might even be tempted to just slam it down in there to 99.45, which you would be triggered right now, not play for that extra couple of pips, that extra wick, but pull that target down, get out of at least half. You got that profit in your pocket, and away we go. So fantastic trade, just the right idea. Now, if you, sorry, I'm doing some stuff over here on the other screen as well. If you do trigger out of half, Now let's think about the other half. How might we trade this? There's going to be a lot of choppiness. It's not going to surprise me. Yeah, so I don't actually trade on this screen. That's what I was saying, is this is not my platform. I've got another couple of screens over here that I do stuff. So this one, I'm not going to click any of these buttons. In fact, I don't even know if this account is set up for FX. That's a good question. If I even hit that button, I'm not even sure what would happen. But anyway, make a long story short, these are all educational, okay? Sorry, I'm personally, so stop loss now has to be up to break even at least on the other half. Taking profits on half. The buy order doesn't exist, of course. That transmitted early on. Now you only have two lines. You got a stop loss and you got a target. The target, we took profits on half. Assuming you did that, you're left with only this. You're basically back. Whoops. Let me discard that. You're basically back to just one order. That's kind of a stop loss down here. You can tell this is not the normal platform. It's going wacko on my prices. Okay, you're left with this. So you're left with half of your position. What did we say that was? 100K. And your stop, you've got in here somewhere. Okay, and the trade's running upward. So you'd be at this point with your other half position. Well, now you've got to decide really what you think is going to transpire from here. How high do you think this thing can go, and what are you targeting? I don't think it's unreasonable to maybe target, another 50 to 100 pips to really think that we can get back up in here closer to 101, which is 150 pips away. Those things are possible, but let's be realistic. You got to think about your time frame and what you're going to do in terms of timing on this. If you tighten up your stop loss too much, you're a short-term trader because you're not giving the asset room to breathe. So if you keep moving your stop up really tight and just jam it in here, you're going to get stopped out on some choppiness. And that's okay. If you're a really short-term trader and you want to be out in the next hour, 2 hours, 3 hours, you want to let it run, but you want to try to, just capture as much as possible. If you keep jamming that stop loss up there, you will be out soon. Okay, that's your time frame. And that's okay if that's your approach. If you want to get up to here, though, that's unrealistic. You can't keep jamming your stop loss in here and get to there. It won't happen. There's just too much choppiness, too much what we call market noise. So if you want to play for that move, your stop has to be well back here. It could be at break even. Okay, that's fine. Leave it there. You got to leave it there for hours and hours because it's not getting up there anytime soon. Now anything's possible, but the reality is it's going to take multiple days, a day or two at least, to get up to that level. Might not even happen until early next week. It may not happen at all, of course, but if it does, it's going to take some time because that's quite a distance away. So I want to make that clear that it depends upon the style of trader, your time frame, those sorts of things. If you have a big target, you probably need to leave a wider stop and give this thing room to breathe. If you have no intention of holding for that long, then yeah, you can start aggressively moving that stop loss up on the other half and see what this thing does in the short term. If it goes another 40, 30, 40 pips, and you want to be out today, you're probably hammering this thing and getting out up there just under 1 on Euro USD. But any way you slice it, you're in a fantastic spot you're going to have some pips of profit in your pocket. You know, good trade, good work, good everything that way. So that's why trading's fun. Let's take a look here. Use Fibonacci to get in after the initial move. So we talked about that. The problem with trying to drag lines or do anything like that, it just takes too long. If we weren't ready and prepared with orders where all we had to do is hit the transmit button, we might have missed it. Now, it did trade back below 99 for a bit, right? If you look at the 5-minute chart, it's, well, let's go even shorter term. Let's go a 1-minute chart. It spiked above 99 and then it spiked right back below, right? But I mean, it only stayed down there for maybe 30, 40 seconds. I don't know how long it was down there below 99, but it wasn't long, right? The news came out and it spiked up and we said, game time, let's get in. And it was kind of jumbling around down here. And then it went right back above and took off. And that's frankly what we expected. So you don't have enough time on this type of event to really, you got to do your work ahead of it basically and kind of say, okay, you know, for that type of move, I got to be a little bit more patient. Now, if you wanted to trade this for a few hours, if you wanted to trade this for the next day or two, then I think it absolutely makes sense where you could kind of break this down and you say, okay, well, I'm not going to chase it up here, so what could I do? I could measure this out and kind of say, okay, here's 50% of that. Maybe if we come back into this zone, I'm a buyer at a 50% retracement, or you know, something like that. You could do some of that work figuring out, and because you have more time. But the way we were trading it today, we knew we just weren't going to have more time to act, right? We were looking for one very specific thing, and it played out perfectly. So good stuff. All right. Yeah, I hope this was educational and helpful for you. So let's remind you of the classes this week. We've traded the FOMC here today. We'll have a recording out about customizing your charts in the TWS software. We'll have our currency recap. Those are both recordings that will be sent out. And then Friday morning, just like we did today, just like we traded here live, Friday morning, we're going to trade the payrolls. So tune in to that. That's at 8:15 a.m. Eastern Time. If you have not already registered, go onto the website. You can click on the link, register through GoToMeeting, and away you go. Thanks again, everyone, for being here. Have a great rest of your day, and we'll see you next time. Goodbye, everyone.